Discover the secrets of the renowned fund manager Peter Lynch on how to invest for beginners. In an impactful video, Lynch shares 8 essential rules, revealing the tragedy of misinformation, the importance of understanding your investments, and the focus on simple companies. With examples like Dunkin' Donuts, he demystifies the market, highlighting simplicity as the key to success. Want to transform your approach to investments? Don't miss out. Subscribe now and explore Peter Lynch's path on the channel. Search for a Peter Lynch How to Invest for Beginners and transform your financial journey.
4. Peter Lynch's background. Peter Lynch, a renowned fund manager, led the Fidelity Magellan Fund from 1977 to 1990, achieving an impressive annual return of over 29%. Peter Lynch, widely recognized as one of the prominent fund managers, played a crucial role in guiding the Fidelity Magellan Fund for an extensive period from 1977 to 1990. Under his skillful leadership, the fund recorded a remarkable annual return rate exceeding 29%, showcasing Lynch's mastery in the investment universe. The content covered in a specific video featuring Lynch stands out for presenting 8 fundamental rules aimed at guiding novice investors. The manager shares his experience and wisdom, emphasizing the intrinsic importance of these guidelines in achieving success in fund management and maximizing investments. Lynch, in expressing his perspective, laments the prevalence of misinformation among small investors, attributing such a phenomenon to media influence. He urges investors to challenge this misguided perception, emphasizing that success in the stock market is not exclusively reserved for large institutions with vast resources but is accessible to everyone. One of Lynch's highlighted rules focuses on the importance of deeply understanding investments. He warns against owning stocks without a clear and grounded understanding of the reasons for the choice, reinforcing the need for investors to be able to articulate, concisely, the reasons for investing in particular assets. This fundamental principle reflects Lynch's belief that solid knowledge is essential for lasting success in financial markets.
3. Tragedy of misinformation. Lynch criticizes the influence of media on small investors, urging them to recognize that they can excel in the stock market without being hindered by institutional advantages. Lynch, incisively, casts a critical eye on the impact of media on small investors, characterizing such influence as a true tragedy. In his analysis, he urges investors to recognize that they have the potential not only to participate but to excel in the stock market, even in the face of supposed institutional advantages that might seem disadvantageous. Lynch's criticism of the media highlights concern about the spread of misinformation that can lead investors to make harmful decisions. He challenges the often perpetuated narrative suggesting that only large institutions with substantial resources can thrive in the market. In doing so, Lynch encourages a shift in perspective among small investors, empowering them to overcome perceived barriers and cultivate a confident and informed approach. The underlying message is clear: the tragedy of misinformation prevents many investors from realizing their full potential. Lynch seeks to dispel this misconception, emphasizing that the media often creates a harmful narrative, discouraging smaller investors. He underscores the importance of challenging these preconceived ideas and following a grounded strategy, allowing small investors to thrive regardless of perceived disadvantages. By acknowledging the negative influence of misinformation, Lynch not only points out the challenges faced by smaller investors but also empowers them to overcome these obstacles. His incisive criticism serves as a call to action, encouraging a more conscious and confident approach to investment opportunities.
2. Importance of understanding investments. Lynch highlights the need for investors to understand the stocks they own. He advises against holding stocks without a clear and concise explanation for ownership. The importance of a deep understanding of investments emerges as one of Peter Lynch's key messages. In his guidance, Lynch incisively highlights the imperative need for investors to comprehensively understand the stocks they choose to incorporate into their portfolios. He goes beyond simple advice, urging investors to avoid owning stocks without a clear and concise justification for such a decision. Lynch argues that, beyond market fluctuations and momentary trends, investors must cultivate a profound understanding of the companies underlying the stocks they invest in. This knowledge not only empowers investors to make more informed decisions but also serves as an essential filter to separate solid investments from less grounded choices. Lynch's warning against owning stocks without a grounded explanation reflects his belief that investing blindly is an unnecessary risk. He emphasizes that investors should be able to articulate, clearly and succinctly, the reasons underlying the choice of each asset in their portfolios. This strategic approach not only minimizes exposure to high-risk investments but also strengthens investor confidence, providing a solid foundation for future decision-making. In summary, Lynch highlights that a deep understanding of investments is not just advisable but a fundamental piece for lasting success in the financial market. His call for clarity and grounding in investment choices reflects his conviction that knowledge is an unwavering foundation for building a strong and resilient portfolio.
1. Focus on simple and understandable investments. Lynch emphasizes the importance of investing in companies and sectors that one can comprehend, citing examples like Dunkin' Donuts and highlighting the need to clearly understand the businesses in which one invests. Peter Lynch's emphasis on focusing investments on understandable companies and sectors underscores the importance of a simplified approach in the world of investments. Lynch vigorously argues that, to maximize the potential for success, investors should concentrate their efforts on fully understanding the operations of the companies and sectors they are considering investing in. He illustrates this approach with tangible examples, such as Dunkin' Donuts, highlighting the inherent clarity and simplicity of such companies. By citing accessible and familiar examples, Lynch emphasizes the need to avoid investments in obscure or complex areas that escape the understanding of the average investor. He advises choosing companies whose business models are transparent and easy to understand, providing a solid foundation for informed decision-making. This approach not only minimizes the risk associated with complex investments but also reinforces investor confidence by creating a clear understanding of the companies in which they invest. The fund manager emphasizes that a clear understanding of businesses is essential for assessing long-term growth and success potential. Lynch believes that choosing understandable companies not only facilitates monitoring and analysis but also promotes a safer and more grounded approach to investing. His message underscores the importance of investing in familiar territory, where transparency and understandability are crucial for long-term success.
In concluding our journey through the wise words of Peter Lynch, the master of investments, we realize the importance of understanding, simplifying, and challenging misinformation in the markets. If these lessons resonated with you, don't forget to leave your like, share your insights in the comments, and, of course, subscribe for more exclusive content. Together, let's unravel the secrets of financial success. Don't miss the opportunity to transform your approach to investments. Subscribe, like, and share to build together a solid path toward financial success. Until the next video, visionary investors.